The Hey Dividend Educational Series presents Dividend Yields and Payout Ratios. Welcome. It's time to learn about two important metrics that help you evaluate dividend stocks. The two metrics are dividend yield and payout ratio. These numbers give you insight into how much income you'll earn and whether a company can sustain its dividends long term. Let's start with the dividend yield. Dividend yield shows how much you earn in dividends relative to the stock price. It's expressed as a percentage. Here's the formula: annual dividend amount divided by stock price and multiplied by 100. For example, if a company pays an annual dividend of $4, divide that by the stock price of $100 multiplied by 100 gives a dividend yield of 4%. A higher dividend yield means you'll get more income for your investment. But that's not always better, as a very high yield could mean the stock price has dropped because the company is struggling. So don't just chase high yields. Make sure the company's fundamentals are strong. Next, we have the payout ratio. This shows how much of a company's earnings are paid out as dividends. Here's the formula: total dividends paid divided by net income multiplied by 100. For example, if a company earned $1 million and paid out $500,000 in dividends, the payout ratio is 50%. The payout ratio helps you understand how sustainable a dividend is. A payout ratio under 50% is typically considered healthy. It means the company is reinvesting in growth while paying shareholders. A payout ratio over 80% could be a warning sign, especially for non-utility companies. It might mean the dividend is at risk if profits decline. Let's take a real-life example: Johnson & Johnson. It has a dividend yield around 2.5% and a payout ratio of about 45%. That's a sign of a stable dividend from a company with consistent profits. Now compare that to a struggling company offering an 8% yield but paying out 95% of its earnings. That dividend might not last. To recap, dividend yield shows you the percentage return from dividends based on the stock price, while the payout ratio tells you how much of a company's earnings are being paid out as dividends. Together, these metrics help you find dividend stocks that are both rewarding and reliable. In the next video, we'll break down the benefits of dividend investing, from passive income to financial stability.